PrimeXBT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on PrimeXBT in minutes.
Birb Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit thebirbnest.com/Birb. Globe is an upcoming crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts. Sign up for early rewards at thebirbnest.com/Globe. Radix is the first Layer 1 protocol built specifically to serve DeFi. More information at thebirbnest.com/Radix. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDAI.
All right, welcome guys. Welcome to the first 200K Congress webinar this week. So I got a very exciting webinar here. I'm going to be sharing like the very basics here of how I how I find, how I identify, and how I trade the horizontal support and resistance levels. So if you haven't already, please subscribe to the channel and hit that like button on the video and that bell notification button on the video so that you guys will be notified whenever we go live in the future. All right, hope you guys are doing well. Right. So I haven't prepared any shots for today because I wanted to do everything live. So I wanted to kind of do everything as if I were to, find the levels on my own live, so you can see the whole process from beginning to the end. And by the way, guys, don't forget we are giving away 1 month access to the BirbicatorPRO indicator. So please. Check out the link in the description and you will, if you watch the webinar, you will be able to see the secret code that you will need to finish the contest. So definitely check that one out. So I'm going to be looking at Bitcoin and I'm going to be looking at this range here on the hourly on Bitcoin. And we are going to try to identify the most important horizontal levels here on this chart, and then we will perhaps go and look at the forex market, because in the forex market it's if you look at Bitcoin right now, it's looking at the daily, it's we have gone up quite just a lot, and we don't have any very clear levels with a lot of touches, right? That's why I'm watching the hourly chart here on Bitcoin to kind of look at the most important levels in this range right here. So basically, I'm going to be showing you how to identify, draw the levels, and trade them, and I'm only going to use long examples, right? So obviously, this would be exactly exact the same principle, but in reversed if you're shorting, right? So the first thing I want to show you guys is the two tools in TradingView that I'm using. And the first one is obviously going to be the horizontal level. You can find that one up here to the left. So it's the second one down to the left. Right here, you have horizontal line. I have all of these added as favorites. So you can just click that star right there and it will add as a favorite tool to your toolbar down here, which is highly recommended. You can also, if you hold down Alt and press H, you will automatically draw a horizontal level on the chart. So that's very useful to know. So if you have your cursor right here and you want to draw some levels quickly and easily, you can just do it like this, holding Alt and pressing H at the same time, and you will automatically add some levels. And of course, another thing that's going to be very important when when looking at when adding horizontal levels is the magnet tool, because using the magnet tool will make sure that you are placing the horizontal level. It will snap to the closest wick or the closest candle close, which if you use the Alt plus H, it will snap to the closest candle. So like this, I have the cursor right below here, and it will automatically snap to that one at the top. It will automatically snap to the top, and it's just easier to, it's faster and easier, and you make sure that it's on the exact level where you want it. The second tool that I'm using in TradingView is the rectangle. So from 1, 2, 3, 4, from the top to the left here, you have a list of tools, and I'm using the rectangle tool. I also added that to my favorite toolbar right here. So those are the two ones we are going to be focusing on today. So let's see if we can find some levels here. Another important thing I want to show you guys is if you use the line chart instead of the candlestick chart here. So this is the candlestick chart. This is the normal the normal shot that you are most likely going to see on most of our shots. But when I'm looking for levels in an area where there's a lot of sharpness, let's say that this is the hourly. So obviously if I want to have less choppy price action, I go to the 4-hour, the 12-hour, or the daily, and you will see that it's much cleaner. But I want to give you guys, I want to show you guys the hourly just for an example here. So let's say that this is just, let's say this is the higher time frames, and you think, this is a bit choppy. You're not really sure where the levels are. If you go to the line chart, the thing that the line chart will do, I think that the tops and bottoms on the line chart is based on the candle closest. I think so. I think it's candle closest. Not 100% sure, but I think so. So right here, it will be much easier to find the levels. So if you switch between the candlestick chart and the line chart, you will see that all the wicks disappear. And when all the wicks disappear, it will be much easier to find a general level of interest. So let's first use the line chart, and I'm going to walk you through the the basics and the main principles of what I'm doing here. By the way, guys, like the video. I see that we have way more viewers than we have likes, so you should definitely press that like button, subscribe to the channel, and hit the bell notification. Right. So there's a couple of things that you need to know before we add the levels to the chart, and there's a couple of principles that you are going to follow if you want to add levels just like I do. And you want to ask yourself a couple of questions, right? When adding a horizontal line to a level, and you're going to call this area right here, you're going to call that that's a level, right? So that's my level, and you want to ask yourself, how long has this level been in play, right? And is it visible on the higher time frames? And how many touches has this level, like how many times has the level been touched, and how violent is the reactions, the bounces of the rejections of that level compared to other levels, right? So let's say that this is the hourly, and you have a level right here, and then you zoom out to like the daily and the weekly, and the level is still going to be visible on the daily and weekly. You now know that you're finding a decent level on the 1-hour chart, the lower time frames, it's also visible on the daily and weekly time frames, which means that you're going to have low time frame players and high time frame traders watching the same area and the same level. And if it's obvious on the higher time frames, it's obviously been in play for quite some time. So a level that's been in play for, let's say, a couple of days or a couple of weeks is obviously going to be much more important and much stronger than a level that's only visible on the hourly and the 15-minute time frame, and it's only been in play for a day or two, right? So that's something important to remember. So let's say here let's go to the 2-hour chart. So this is a very good question, right? when to draw levels instead of supply and demand zones. So what I'm thinking here is how I interpret this question is, when do you use levels and when do you use areas? And I'm going to explain that in great detail right now. So first of all, we want to find a general area where price is, interacting with. So let's kind of start here. Let's start here and work our way upwards and to the right. It doesn't really matter if you start from the right to the left or the left to the right. It doesn't really matter. But we have an interesting interaction with the levels here. You have one touch of this general area right here. Price is touching that level right here as well, and you have a touching of that level right here, and then right here. So if you add a horizontal level right across this area where you have quite a few number of touches, so that the horizontal level goes through the whole area, so that these price action, like these bounces and reactions that we've drawn here, the level has to go through every single one of them, right? So let's see if we can snap the level to that high. And you now see that if you use that exact high right there, you will have incorporated the whole area, right? So that's going to be your one horizontal level. But what you want to do here is you want to add levels on every area that kind of makes sense right here, right? So we definitely have that top below here definitely makes sense as a level as well, right? And I say we can probably add a level. So this is the first part of finding horizontal areas, right? So what I do is I add the levels, and if there's a cluster of levels on my chart, if I have an area on the chart where there's a lot of different price levels at the same area, I will then add a horizontal supply and demand area. So I will remove the horizontal levels and add an area, and I'm going to show you exactly how that works. So let's add another level to that high right there. You can see how it's kind of interacting with that small bounce right there and that high. So let's work our way upwards to see if we find another area of interest, and we definitely have something here, right? One bounce here, some type of bounce here, here, a small reaction right there, and this one, and here, and something's going on right there. So we want to have a level going through that whole area. So let's see if we can find a level where that we're going to go through that whole area. I think I'm going to use that one, or maybe this one right there. So I like that one, right? It interacts with that whole area right there. So I like that. I'm also going to add a level on that low right there, and you're starting to see some clusters emerging here, right? And I'm going to show how I will transform this line chart with levels into a candlestick chart with clearly defined supply and demand areas. And we are then after this going to go through the very simple break and retest strategy on how you can actually trade using using these levels in a very, very simple manner. So if we go up one level, we're going to try to find more levels that we think are important. And I'm watching this here, that reaction right here, because remember what I said in the beginning. The violence of the reactions are very, very important, right? So if you watch this, for example, you have a breakout here, reclaim as support, and a extremely violent reaction, right? And when I'm saying like violence of the reaction, I'm talking about the more explosive the breakouts is, and the more explosive the reactions and the bounces are, that's the violence that I'm looking for. I'm not sure if that makes sense, but the stronger the moves are, the more sense it makes to view that area as a strong level. So here you have a powerful breakout, a powerful break down, and a very powerful reaction. A powerful reaction level breaks to the upside, a very strong move to the upside. And here's the first bounce, and that bounce is very, very strong and very violent, right? And here's another example on where when you break above this level, you just keep on going, and it's a very strong move. So that area right there is very, very important based on that factor alone. And then, of course, ask yourself, how long has that level been in play? Well, on this region of the chart, that's the level that has been in play for the longest time. I would say that's most likely the most important area, which is very interesting, right? Because if you look at this area, that's actually the around 51.5K, right? So it's around 51.5K, and 51.5K, if you look at this this chart for Bitcoin, it's down in this area right here, which is a very, very important area, because if Bitcoin fails to hold this area down here, which is range low, which is, that's going to mean that we are definitely in the danger zone of creating a bearish market structure on Bitcoin, which is interesting because on this chart right here that I'm just using as example, we have found exactly the same level as being the strongest level on this line chart, and it's also the most important level for Bitcoin, on the daily and in this current trend. And if you look at the higher time frame trend, so it just makes absolutely sense that that would be one of our strongest levels. Anyway, so what I do in this area right here, obviously, I don't need 3 levels here. I know that this is an interesting area. We have 3 very distinct horizontal levels that go through the whole area. So what I'd like to do here is I go to the rectangle tool. Remember, I had the rectangle tool up here. I select one of these levels. I use the magnet tool, right? I select one of these levels, which is that high right there, and I then select the upper level. So we now have a area. If I can seem to snap that one on here, right there. So that's our area. That's our supply and demand area. That's our support and resistance area, right? Now we have that area on the chart. I can remove these levels, right? That part of the chart is now done. We have a very important area right here. This one, I'm not really sure if it's perfect. So I'm just gonna, instead of snapping it to the levels using the magnet tool, I'm just gonna add a supply and demand zone right here. Just an area using the rectangle tool. I'm gonna remove the horizontal levels right here, and we're gonna go one step up, and we're gonna look at the next levels. And I think that the next levels are gonna be that one, and up around this area, right? And I think that, adding a rectangle right here as an area, it kind of makes sense because it encapsulates the whole area right here. But it's not as obvious as the ones below. So if you only want the strongest and the most important levels on your chart, you want to ignore the levels where there's just a lot of price actions going up and down without any strong violent reactions. But what I like about this level right here is that bounce right there. That bounce right there tells me that there's something going on here. That's a very strong reaction of that level. And, so I just like that. Above here, we obviously have this area right here. We need to do something with that area right there because it's confluent with these highs right here and that fake out. So we have to use that somehow. So I'm just going to go ahead and add a level right there. So what we do now is we've done everything we can on the line chart to try to find, good levels. What we do now is we do go to the candlestick chart, right? And we try to adjust these levels based on the candlestick. So we were on the 2 hour. What we're looking for now is to try to optimize these levels based on how the candlestick chart looks. So right here, I don't think the lower part of this level makes a lot of sense according to these candles right here. Let's go to the left to see if we can optimize this area. I definitely think we can make this level even more, even smaller, right? So if we move the lower part up to these high wicks right here, you will see that price action is still interacting with this level, and we're bouncing inside that area right here prior to we're reclaiming that area and breaking out. These are just, we got fake outs right here, wicks coming above, and that's a nice bounce at that level. So what I try to do is when I move over to the candlestick shot, I try to really optimize the level and make it as small as possible. And here I'd like to use that wick right here, because as you can see, it's now a very small area, but it still incorporates the important price action on the candlestick shot. So that is going to be the important area. And something else that you need to remember is you should always put more emphasis and more focus on the most recent price action. So you always have to focus on the right side of the chart. So the best way to do this part of analysis is when you have the levels on and you have the areas on and you move over to the candlestick chart, you try to always go from the right to the left. You never read from left to right. You always try to read from right to left and put more emphasis and focus and importance on the most recent price action. And what I mean about that is you look at the most recent breakout, right? The most recent breakout that kind of broke above this level. And that's this area right here. That's this area right here. So I'm going to be putting most emphasis on this area right here. And that's why I want my area to be based on this breakout right here. And if you go to the left, you see that I have not used that low right here. I've instead put more emphasis on that high right there. So now we have a pretty decent level right there, and we try to kind of come up and optimize these levels above. Right now, I think I'm just going to remove that level right here. I'm just going to remove that level, and I'm going to keep the one below. And like I said, I'm going to be focusing on the most recent price action. And when looking at the most recent price action, I think it makes more sense to use that low right there. And let's see, where's the breakout here? Yeah, and we're going to use that low, that high right here. So I do think this makes more sense according to the most recent price action right here, where we have these bounces right here, that powerful breakdown, and reclaim that area right here, bounce and a bounce. So I kind of like that area. And we go to the left and we see, it still makes sense on the left. Now let's go to this lonely horizontal level above. So we're going to be trying to find a area here. Now let's go to the 4 hour. So now we have what I'd like to say, well, a pretty starts to become much cleaner when you go up in time frame. The reason why I wanted to use the 1 hour time frame is just to show you how you can get rid of the noise and try to find levels, because sometimes you're on the daily and maybe the weekly and the chart is just very there's just a lot of choppiness and a lot of noise, and you can't really go higher. But obviously right now we can go look at the higher time frame. So I'm on the 6 hour chart right now. Let's go to the 8 hour. Obviously you see something interesting here, right? You have that level right there, and that's definitely an interesting area. I really do like that. And if you see, look at this, you see that lower horizontal that I've just added right now. And then if you move that one down and you put emphasis on the most recent price action on the 8 hour, I would use, that level right there as the resistance, or the upper part of that level. And this structure right here tells me, and this reaction right here tells me that it's something's going on here, right? We have, that's resistance, the lower part of resistance, that's the upper part of the resistance, and this also adds great confidence to that area. So now we have a clear level right here, and we're just going to add a rectangle tool, snap it to that high right there, and then to the high up here. So this is what we're looking at. This is our, in my opinion, the most important horizontal levels on Bitcoin in this range right here. Now let's go to the daily, and we're going to look at these levels on the daily. And the way I would play this, and now we're going to go through the actual, how to actually trade this, right? So based on these levels, there's a very simple way to trade this, right? I would want to go long when a resistance area breaks to the upside, right? And when that resistance area breaks to the upside, I am going to look for a retest of the breakout area, and I'm going to go long on the retest. And that's why you hear people talk about the break and retest strategy. It's like very, very basic, very simple way of trading, but it's surprisingly it works surprisingly well, right? So the whole idea here with the break and retest strategy is you want to, I think it's better if I show a market structure like this. So you have higher highs and high lows, right? And on every level like that, you have a horizontal level, right? So that's your horizontal level right there. Like that, right? So the whole break and retest strategy is based on the fact that that's a breakout and that's the retest. That's the breakout and that's the retest. That's the breakout and that's the retest. Quite simple, right? Now you want to wait for the breakout and go long on the retest, right? And I'm going to show you some examples of that. We're going to be looking at the Bitcoin chart here and see if we can find some interesting levels where that would apply. I'm seeing something quite obvious right here, and that's obviously this level right here. If you look at this is daily, obviously, but if you look at that level right there, it's a pretty clean breakout, right? And prices continues up, right? And now you're starting to retrace, right? So you're going to be looking at what's the most important region for a retest. Let's remove these levels right here. We don't really need them anymore. We're just going to use the replay function here, and we're going to be looking at this level right here. So let's look at the 4-hour here. Actually, let's look at 12-hour. So we have a level right here. And what I do in this case, if I see something like this and I'm looking to go long on the break and retest of resistance, if I have this type of price action where you have many candlestick open and closes like that, many candle open and closes like that, and then one above like that, it kind of makes sense for me to just add a horizontal level from these closes to the one above, and just add a horizontal just like that, right? And if you look at the candlestick chart, you will see that it looks pretty nice on candlestick chart as well, where you can hit the lower part of that level and then gets rejected at the upper part of that level. So let's go back to candles right here. By the way, guys, subscribe to the channel and like the video. It will it's going to help me and the Birb Nest immensely. So it's just a small gesture from you, which is going to help us a lot. So if you haven't already, like the video and subscribe to the channel. Right, so now we have a level, right? Price, Bitcoin is in a very strong uptrend. We have a decent resistance level right here, and we want to go long on the break and retest of this area. Now, the thing is, you need to be very, very patient, right? You need to wait for the area to break to the upside. And when it's broken to the upside, you will wait and you will wait and you will wait, right? That's all it is. You need to be patient, right? Because sometimes, especially when I'm trading the Forex market, I will be looking at the weekly and maybe the monthly chart, and I will be adding a level that's not been touched prior to the breakout. And I will just hit an alert right there, and I will write an alert that says like price is approaching a clean level. And what I mean by a clean level is a level that has broken and it hasn't been touched after the breakout. So you want to be longing the first retest of a clean level, and the retest has to be a rounded retest. It needs to have a clean breakout, right? Where price goes above the level, closes above the level, and does not retest the level until there's a rounded retest, because you need to give the market enough time to accept whatever you're trading above the level, right? If it's just a breakout that goes like this, breakout and retest just immediately, right? That's not a good retest, because you want to give the market enough time to accept Bitcoin above the level that you're looking to be buying. And that's why you get fake outs, right? Price just breaks out and then immediately the next candle will close above, right? So you want to have enough time. You need to give the market enough time to really, all the sellers in this resistance needs to be really, absorbed, and they need to be transformed into buyers, right? And it takes time, right? So this is actually a good example of a rounded retest, but this is just a failed trade, because what you do here is this would probably not be an entry, because what you want to do is when you're waiting for that rounded retest and the first retest, you want to wait for confirmation before going long. And I want to show you that as well. By the way, guys, if you are Nest Club subscribers, I have a webinar in the members section on our webpage that I highly recommend that you guys check out. It's a 1 hour long webinar where I show you all the tips and tricks on how to really optimize your entries with this strategy. And optimizing the entries, that's a whole lesson in of itself. So I'm just not going to go into detail on that. But when I say wait for confirmation and only go long when you have confirmation of a bounce, that's the tactic that I'm talking about that I've showed in that webinar. So obviously, this would not have been a trade because there's no confirmation of a entry. Anyway, let's see. Now we will most likely get a breakout here. Right, so you see that's a breakout, and if you go to the daily, it is I think the 4 hour is better. Yeah, so it's a clean breakout, right? It's a clean breakout. If you look at 4 hour, you have that level, very nice, very nice. It's a clean breakout, and a clean breakout. What I mean by clean breakout is that it's closing above and then continuing higher. It's not closing above, testing, and then immediately running. I want it to be a clean breakout, a clean level. This is now a clean level. It has not been touched after the breakout. There's no retest, no immediate retest, right? This is what I mean by immediate retest. You see that? This is not really, if this were the level, that's not a clean breakout. But if that is the level, this is a clean breakout, if that makes sense. So this is a clean breakout. This is now a clean level. And it doesn't really matter if Bitcoin continues to trade upwards and range in this area for 1 or 2 weeks. This is still going to be a clean level until it gets tested, right? So I will have an alert right here that says something like, when maybe up here. So when Bitcoin comes down, I have an alert that tells me Bitcoin is now approaching a clean level, right? So let's continue higher. So when you're looking at this, you're like, well, obviously the trade is gone, right? You have a breakout and you wanted to go long and retest, but the trade is gone, right? There's no trade here. It's just gone. And this is where a lot of people will FOMO, right? They're probably going to start to FOMO here or here because you already had a retest right there. But if you're a break and retest strategy trader, you will have to really be patient and you will wait for confirmation. Like, for example, now we have a pretty decent level right here, right? So you have a pretty decent level right here. Now this could also be, because this is just a perfect breakout and a very, very clean breakout right here. So that would be a very good break and retest strategy right here. But if you look at how price is interacting with that level right here, it's not really, I mean, obviously there's no trade here because there's no confirmation of a bounce. So you wouldn't go long here, right? And now you have broken this level right here. So now you're looking at the next level below. So you know that this is an important area, because if you look at this current trend or range that Bitcoin is trading in, if you look at this area right here, you will notice that the most important and the strongest level on this chart and inside this range is obviously this area right here. It's been in play for the longest inside this area. It's pretty violent reactions, violent breakouts, violent bounces, violent reactions to that level. This is the most important level, most likely. So I will have an alert down here that tells me that Bitcoin is now approaching a significant clean level, and that's the level where I'm looking to go long. And you're going to go long when there is a clean when there's a confirmation of a bounce. So let's see if that ever happens. And as you can see here, we're approaching that level right now. Let's see. So that's the retest, right? Now that's the retest of that level. And we want to go long. Let's just quickly show you one tactic that you could use to confirm the bounce here. Let's add to prior to the entry, I want to look at invalidation levels, right? So you have an idea of what you want your trade to be like before you enter, right? So before price comes down here, you have two level of interest. So for a scalp trade, if possible, that's going to be an invalidation level, and then the next invalidation level below is going to be that level right there. So how I judge my invalidation levels is I look at the swing lows prior to the breakout, right? So if there's a breakout and a very obvious swing low prior to the breakout on the 4 hour, I'm going to be using that level right there. And what I like about this particular shot right here is you have a double bottom right here, price, and that's a double bottom and a break and retest of the neckline of the W. Usually when you see something like this, you don't want price to break through the level and go lower than that W that you had prior to the breakout. So that's something to keep in mind. If you have a clean W prior to the breakout, your invalidation levels should be below the double bottoms, the double bottoms, or whatever you want to call them. So these are my two invalidation levels. Now you're trading inside this level. So you now have alerts going off all over the place, and you're actively watching the chart, and you're very interested in going long on this, right? So what are you looking for? Well, what I'm looking for mainly is a break in market structure and or a W. And also, no, never mind. Let's not use the fibs. I'm only going to stick to horizontal levels here. So on the 1 hour, on the 1 hour chart, we have a like getting, if you reclaim this level right here, that would be a break in market structure. On the 15 minute, you might see a W, something like this, right? And you might, like this. So you have two, like if price moves like this, you have two level of interest for a potential trade, right? So you would go long in a break and retest of the 15-minute W right here and have your stops below that first invalidation level or just below the Ws, depending on your risk profile, right? And if you want to have the safest option, you go long in the break and retest of the area where you have a bullish break in market structure on the 1 hour. And in that case, you would have your stop loss maybe below that zone, depending on how price action looks when it actually bounces off that level. So let's see how this plays out. Remember, I haven't really prepared in a short, because in all my webinars, I want to be doing it live. I want to find everything for you. So this could just go to shit. I mean, I have no idea what's going to happen now when I press play, but let's hope that something interesting happens here. And as traders, obviously, we have to adapt to the market and we have to adapt to the price action. So I will show you how I'm going to look at this in terms of finding an entry, right? Let's go forward. Boom, that's the touch of the level. We now have a 15-minute W inside the level and break and retest off that W. So let's say if we get let's see if we get a bullish engulfing on the 50-minute, a strong bullish candle on the 50-minute. I like that. I really do like that. Let's just go long right here with stops below the W. Let's see how this goes out, right? So let's see how this plays out. And obviously we're let's say we take, you know, first take profit at the at this area above, because that's just a obvious resistance area, right? So let's see. So I'm gonna switch over to the 1 hour, and I'm going to show you how this looks on the 1 hour. Remember that I said that a bullish break in market structure would be a reclaim of that white horizontal. Now we have a great entry for a swing trade. Now we have great confirmation on the 1 hour chart that this is going higher. If you go back to the 4 hour chart, you see price coming down in that area, bouncing nicely off the area. We zoom down in on the 15-minute and we find a W and a double bottom inside the area, just perfect. And we went long on the break and retest of the 15-minute W. And look at the 4 hour, we are approaching a resistance area right here, but on the 1 hour, we have now broken the bearish trend on the, you know, the local trend, and we have higher highs and higher lows on the very local trend with a bounce inside this area. And we now want to expect Bitcoin to continue to trend higher. Look at this trend right here. It's a big sequence of just higher highs and higher lows on the daily, right? So when we have a break and retest of this magnitude and significant of a significant level like this, look at the daily. This is where you definitely want to go long. When you have a strong uptrend and price bounces at a significant horizontal level, you go long, right? And you can use the techniques showed in the entry, you know, optimizing entry webinars to really get the tight entry, right? And I mean, if you go back and look at the 50-minute here, look at that. I mean, look at that right here. You have you know what? I think that's probably the best entry, the best stop loss right there. And let's see how this actually plays out. So on the 4 hour, I mean that would obviously be a great entry, at least on here, right? Now we know that Bitcoin is going to get rejected here and move down, but I mean if you trade just using this very simple strategy, you could take like one, move your stop to entry at 1-1, take some profits at 2R. I mean, up to this high right here would still be a 5R on a pretty decent swing trade on Bitcoin. And guys, like, this is so simple. It's so extremely simple. And this is, I would like to say, this is at the basis of all trading systems, right? All trading systems, it's all based on this. So if somebody's trying to sell you a system online, I'm 99% certain that like 75% of this of that system is based on this, right? Of course, that's not always the case, but I'm just saying that horizontal levels should be at the basis of your trading, at least in the beginning, right? So it's very important that you guys understand the whole idea with bullish market structure, bearish market structure, and the accumulation and consolidation areas between the major shifts and major reversals in market structure. And inside these market structure and these market conditions, you will always find horizontal levels. And if you use the break and retest strategy with a confirmed bounce, you will, I mean, I remember when I started trading and when I started my journey into the world of technical analysis, I used this simple system for 1 year and I had about 50% win rate. I had nothing on my chart other than horizontal levels, and the only thing I looked for is resistance to break to the upside, wait for a rounded retest, go long if there's a bounce, put my stop loss below the last swing low prior to the breakout, and move my stop to entry at 1-1 and take profit at the next resistance and the next resistance and the next resistance, and just let the trade run with every new swing low. Extremely simple, and it works. It still works, and it's surprisingly good. Now, we have 50 minutes left, so I'm just going to go through something very simple here. All right, giveaway link. In the description of the video, you have the link to the giveaway. Press that link if you want to win 1 month of BPRO, the BirbicatorPRO R indicator. Yeah, use the link, use the secret code that you are probably seeing right now. And after you've done that, subscribe to the channel. All right, so let's just quickly, I want to add something very important here. This should be the base of your system, right? So this is the base, right? Now, how do you increase your win rate? How do you increase your profitability? Well, you add stuff to this, right? So in my case, I like to look at the Fibonacci levels, right? I like to look at the Fibonacci levels. I like to look at the moving averages. I like to look at trend lines and that kind of stuff, and the stochastic. So let's just quickly add those things right here. And let's see if there's any confluence with this setup. So let's add first and foremost the stochastics RSI. We're on the 4-hour. I want to go long only when there's a bull cross below 20 on the stochastics, right? So price is testing that level. We have a bull cross on the stochastics RSI on 4-hour below 20. That's, you know, a check on that confluence. I now add the daily 20 and 50 EMA. I want the bounce to be on any of the moving averages. It's close enough to the 50 EMA and the daily, so that's definitely a check. I want this bounce to be confluent with any of the fib levels. And right here, it's a beautiful confluence of the area between the 618 and the 50. And it's close enough to the 618 right here to be, to be confluent, definitely. Because it's just, you know, the 50, I would just view this as that area being front ran, right? What else do I use? Well, not much, honestly, but that's what you do, right? You have this system as your base, and then you just add whatever indicator you want, Ichimoku cloud or harmonics or whatever. Just add it and find confluence with this with this simple system using horizontal levels. Let's go through the questions. And first of all, I want to bring this up. Somebody doesn't have Discord. So what you should do is download Discord, join our Discord server, because you would not believe the amount of educational content and stuff you're missing out by not being in our Discord, right? For example, the daily Bitcoin report, where we give a full breakdown, a very detailed analysis of Bitcoin, and for Nest Club subscribers, daily video updates on Bitcoin, and sometimes I'm also doing market updates on altcoins and stuff. So get Discord, join the server. You will not be disappointed. All right. What else? Do you also use harmonics? No, I use only the stuff that I've showed you today. Stochastics RSI, moving averages, fib levels, horizontal levels, and trend lines. Keep it simple. The more shit you add to your chart, the more confused you will get, and the bigger the chances are that you will just have what we call paralysis analysis. Paralysis analysis, something, or the other way around. You know what I'm saying? So keep it simple and only add the stuff that you think actually makes sense. All right, let's go. Any more questions? Let's see. Right. 15 minutes better than 1 day. Yeah, so the 15-minute chart is better if you have a system that's applied to the 15-minute chart, and if you're scalping on the lower time frames and you're basing your system and your trades on the 50-minute, then yes, it's better than the daily. If you are a swing trader, obviously the daily chart is much better. It's all a matter of, you know, what type of trader are you? What type of personal trading style do you have? I would say that all time frames are of equal importance. When I'm trading, I'm looking at the you know, in the Forex market, I'm looking at the monthly, the weekly, the daily, the 4-hour, the hourly, the 50-minute, and the 5-minute, because sometimes I'm actually scalping on the 5-minute a move that I found on the daily and the 4-hour. So Whatever works for you, that's the best time frame. All right, what else do we have? So this strategy is universal for all time charts. Well, let's take a look, right? Let's take a look. Let's all right, so let's look at the S&P 500, right? Let's look at the S&P 500. Let's see if we can get a I mean, this chart right here is a bit messy, but you still have you obviously have this level right here where you had a clean breakout above that level. So you have two very important levels right here. And I remember taking this trade. And obviously, like you have an area right here, and it's not perfect, but it's still the same principle here, right? So you go to that level right here. It's a decent breakout right here. So you had that 4-hour W right before, and also that major daily W right here. So you had the 4-hour W, and you break out here, rounded retest, got a nice bounce right here, probably also confluent with the stochastics and the EMAs. Well, not really, but so yes, it works on I'd say all markets. Let's look at USD JPY. Works surprisingly well. Like it works best in crypto and forex, I think, but I mean it works everywhere. It works everywhere. So right here you have a pretty decent breakout. A very important level right here. You kind of see how it's important area because you're bouncing here, very violent bounce right here, breakdown, reaction, and then a very clean breakout right here. That's a perfect breakout. So look at the 4-hour. You see that? Just a perfect breakout right there. So we add a zone somewhere here. And when price comes down, we go to the 1-hour. Go to the 1-hour right here. And I would probably go long here with stops below these wicks right here, and probably confluent with moving averages. Well, not really. But yeah, makes sense, right? You have that breakout, rounded retest. Market has been giving enough time to really accept USD JPY above this level, comes down, retest that level, and goes off. So next level would be this area above. Breakout, rounded retest, bounce. It just continues like that. It works on all time frames, all assets. I'd say it's just a very simple. Like it's a very basic way of how markets are working, right? This is not really a perfect example because I would probably have my area drawn like that, but it's still, I mean, that area gets front ran, but it's still the principle is the same. You have a very strong resistance area right here, clean breakout, comes down and retest that area, and then a violent reaction to the upside. What's the name of the strategy? So this is not really a strategy. It's just you have horizontal levels. When you break to the upside, you look for retest. We call it the break and retest. You probably heard that before. It's not something that I've invented. It's just a basic and general part of how markets work. Usually, when a resistance area breaks to the upside, you will most of the time see a retest and a retrace back to the breakout area. That's the difference between retest traders and breakout traders. Breakout traders buy the breakout. Retest traders wait for the breakout to retrace back to the breakout area. This is a good question. I see you have drawn one SR area. There are lots of areas that can be found. How do you determine which ones to pay attention to? Right. So as I said in the beginning, the ones you pay attention to is the ones that are visible on the lower time frames. And if possible, you want to find the levels that are visible on the lower time frames and the higher timeframes. You want to be sure that the level that you selected are the levels of highest importance because they have been in play for a longer period of time compared to other levels, and they make sense based on the most recent price action, right? And how many times has the level been touched, right? Is it a level that's visible on the daily and weekly, and there's like 3 bounces on the daily, compared to a level that's not even visible on the daily and there's 2 bounces on the 50-minute? Obviously, you're going to be choosing the one with the high time frame confluence. And then, of course, the violence and the power of the reactions when that level is broken, and when price bounces off that level, or when price gets reacted at that level as resistance. And yeah, I think that's it. Another thing I really want to add here is to confirm a level broken. I look for either, let's say you're a trader who's focused on the daily and the 4-hour time frame. To confirm a level broken, I would like to see a 4-hour open and close above the level. So if you go back to the BTC USD chart here, let's look at that first example we had. So when is this breakout confirmed, right? So this is the breakout, right? But when is that breakout actually confirmed? For me, it's only confirmed when this candle closes up here. So you have a clean candle with an open and close above the level. When there's a 4-hour open and close above the level without any wicks touching the level below, then that's a confirmed breakout, in my opinion. This is not a confirmed breakout because the next 4-hour candle can close below, and that's a fake out. Just like this was a fake out, that was a fake out, and that was a fake out, right? So you have to have a clean 4-hour open and close. If you look at this area right here, there's no clean 4-hour open and close. Like it's too messy, right? You need to see a breakout and then price to continue upwards, and for the next candle to open and close above the whole level. That's a clean breakout. Will you use fibs and EMAs extra confluent with horizontal levels? Yes, I think just like I've just showed, I add, you take this system and use it as a base, and then you apply whatever indicator you think makes sense on top of this. And when your indicators align in the same area where you have the horizontal area, that's an area of confluence, and that's where you should take the trade. All right. Yeah, and yeah, exactly. Master the basics. It's the very important. And right here, how we can identify if it's a fake break. Well, if fake out, like I've said, it's when one candle closes above and the next one closes below. So to prevent a fake out, you want to have a candle opening and closing above. Now that will obviously increase the risk of missing out on the retest, but that doesn't matter because the retest is going to come way later anyway. If you're trading the daily and the 4-hour, you will most likely wait like 2 or 3 days for the proper retest off that level anyway. Yes, we do a lot of technical analysis and education in the Discord. That's what the Discord is about. Our community, the Birb Nest, is all about educating new and experienced traders in our way of trading and to give you the tools to increase and improve your profitability and your trading. So yeah, 100%. I try to share as much educational content as possible in the Discord, and with or without the 200K Congress, we're doing daily webinars in the Discord. So remember that, guys, this is not something that we're doing only because of the Congress. We're actually holding these webinars daily before the Congress and after the Congress. The only difference now is it's free for you guys because of the celebrationary period. All right, is there any example of clean break? You're trying to, well, yeah, this an example of clean break. Let's see. Yeah, here. This is an example of a clean break. If this is resistance, the fact that this candle closed above the resistance without any touches on the lower time frames, that's a clean break. Let's see how that looks on the 15-minute. So we only have a couple of seconds before I have to end the webinar, but let's see if that makes sense on the 50-minute. Yes, so this is how it looks on the 50-minute, which means that, all right, so this is actually not a clean break on the 50-minute, because you see here that 50-minute wick is touching that level right there. So on the 50-minute, it's not really clean, but I don't really care because it looks beautiful on the 4 hours. So that's a clean breakout. When there's a powerful candle, just a thrust candle just right through the level and then closes above, that's a clean break. All right, guys. So that's the end of this. I would like to thank you all for. Okay, last one. How do you put stop loss for the breakout and retest strategy where there isn't a W formation? Well, it doesn't really matter because. All right, I'm sorry about that sound. My kids are outside banging the house with something. I got to go out and what the hell are they doing? All right, guys. So I've explained this in the webinar, and I'm sorry, guys, but I really got to run out and see what they're doing because it sounds like they're actually destroying the house. All right, guys. Thanks everyone for joining. I really did enjoy this, and I really do enjoy all of you joining and asking all the questions. I hope that you will join on the next one. So check out the schedule that we have in the channel, and don't forget to subscribe to the channel, hit the like button on the video, press that bell notification button, because we will be doing these after the webinar, or after the 200K growing as well. So you want to be subscribed to the YouTube channel. All right, guys, take care and see you guys next time.